The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, you get the Dow Industrials down 7, Nasdaq's off 18, S&Ps are off 1.5. We have gold down $8. Excuse me, folks. We have gold down $8.10, trading at 11.40. You get silver off 45 cents at 15.64. Bonds, you get the 10 down 4 ticks, 128.22. 30 is off 3 ticks, 157.18. The King dollar is up 60 ticks at 95.64. The euro is up 11 at 112. Now, if we start this baby off, let's go over and we'll take a look at the Dow Industrials, because what you have inside the Dow Industrials is this. Dow out here yesterday failed on price. It had volume as it got over. The September 17th swing point. That swing point 16,933. However, what you're also going into is the downdraft that was created out here on the 21st. On the 21st, folks, we did 1.3 billion. So bottom line is that you can get a test of that high out here inside, the Dow from yesterday. You don't have to, though. That's the bottom line. That is a failure. It's a failure from the downdraft of the 21st. We go take a look at the S&Ps, the SPY. What you have with the SPY, that had also closed over the swing that was testing yesterday. We closed at 199.41. They jammed it right into the close. Bottom line, the number you're looking at out here is the 199.28. We're right at it right now. Intraday, we take a look at this, see what we have out here. So intraday, it still doesn't have the juice out here. I suspect what you're going to get a slow, subtle roll here. That's the way this market looks to be shaken out right now. And if I put this up in the futures, you're going to see, oh man, this is a trip. So what you're running into, folks, is this. The market is running into this 7th. This 7th is where we came down from the price point of 1991. Fast, furious, and you got down into the 1967. That baby right there, that is some monster selling. 67,000 contracts you're running into. The last 10 minutes we did 39,000. That's a huge amount of juice to get through. I suspect you're not going to do it. The Qs, NDX 100. What do you have inside the Qs? This is what you have. The Qs yesterday got to a price point. They closed out at 105.63. That 105.63 got over the 18th. The benchmark out here today is the same 105.63. We take a look at the Qs, the way the Qs are trading right now. The Qs still are the weakest link inside when you're talking the Dow, the Nasdaq, and the S&Ps. And what I suspect you're going to see out here, the Qs already this morning have hit the 4288 number. You're going to be right back down there, but more than likely you're going to see the Qs roll in a big way, meaning come down to the 4269 number. That would be another $40 down from where we are right now. Inside the NDX 100, this is what you have. The strength inside the NDX is Mattel. That's up 43 cents. Green Mountain is up $1. You have Micron Tech up 31 cents, and Dish is up 85. Taken away from it on the way down, eBay. eBay's down $1.68. Skyworks is $2.98. That's a supplier of Apple. Liberty Finance, Linear Tech is down $1.12, and Tesla is off $5.24. Tesla's getting interesting because Tesla. What Tesla has done is this. It's been a straight line move from 271 to 226. Now what has happened is that you're into the bar from August 24th. Now you're into this bar and you have volume expanded dramatically. Tesla yesterday, now this is pretty wild. It was really a subtle move. Now, Tesla was moving 10 points, but, when you look at the chart, that 10 points is not a huge deal for a $250 stock. but the volume exploded, folks. You did 1.7 million. That is saying that you have a few large operators that are getting out of Tesla, you know. So we'll see where that shakes out. Thus far this morning, you have a couple pretty big trades. You know, you get a stock at 225,000, well, per thousand, okay? Bottom line is that, you know, right off the bat, you had 31,000 sold in the marketplace. Now, let's go to the Dow Industrials. We take a look at the Dow, see what the strength is inside the Dow versus the weakness. Your strength is Nike. That's up 172. You get DuPont up 70 cents. Big Mac is up 98 cents, and Cisco's up 13. Big Mac's going to get interesting. We'll go back to that in a second, just because of Yum, basically. Well, not just because of Yum, because of Big Mac itself. Now, Apple's the culprit. Apple is going to throw the water on all these indices out here today. Apple's down 214. That's the leader, bringing the Dow south. American Express is number 2. That's down 71 cents. Pfizer is down 29 cents, and JP Morgan Chase is down 53 cents. The IBB, we take a look at the IBB. IBB right now is flat. We're down 189, nothing heavy inside of that. When you start wrapping that together, what you have is that it's the NDX 100 that continues to basically gnaw at the S&P, at the Dow, and keep pressure on it. Now, let's go over to the gold market. Gold, folks, wants to go to the moon. It's so cool watching this whole thing shake out. And this is what you have. The gold market today traded to 1135. We get 66,000 contracts traded. This baby is, if you're a bull in the metals market, folks, it's about not as good as you can get, but it's really close. And this is what it is. The swing point that gold is building cause into is September 24th. That high is 1156.40. Now watch what happens. Your probability is much higher when you have one swing high with volume. We have 2 swing highs with volume, and we have silver that had already taken out the swing high, okay? And we've tested lows with light volume. That's about the best setup you can get. But there's one more key to this. But let's go through the gold one first. So they bring gold down earlier today. If you watch this intraday, watch what you're looking at. We do it intraday, and the slam down was a good slam down. But guess what? That slam down still only had 6,500 contracts, and you were going into 7,200, 7,900 contracts. And this is the kicker, okay? Bottom line, you couldn't break a swing point. So what ends up happening? You bring it down, you bring it back up. This is building cause to get up over, and I expect what you're going to see, and it's going to be really interesting here because we're going to be going into a Friday, because that swing point of 1156, I expect is going to get blown away. The 1169 is going to get blown away, and the next run here is going to go like to 1189. It's going to be like a $50 run. And where am I going with that? Okay, so we go from there over to the silver market. Silver had already taken out the swing points and taken them out with huge velocity. What does silver do today? Silver gets down to 1537, rejects it. It's going to have lighter volume, and all it did went to the top of the range. That is a classic technical setup beyond belief. Pulls back right to where it already broken the swing points. Silver's setting up, and silver more than likely is going to get to the 1785 a lot quicker than gold. Now let's go over to King Dollar. King Dollar, folks, okay? The aspect on King Dollar is this. King Dollar has a slow roll going on. Technically, it has a high volume swing low at 92.85. So that wants to get tested. Fundamentally, what you have happening is that you have, whether it's the Chinese, whether it's other central banks that are net sellers of treasuries at this point, and that all that does is put more pressure on dollars. That's what the actual end result is. If you get a chance, read the article on the front page of the Wall Street Journal today. You got to take your time reading it, because they're talking about treasuries getting sold, and they are getting sold, and then they also talk about, but the demand from corporations are heavier than the selling from the treasuries. Okay, so you would think that what should happen at that particular point is that should strengthen the dollar. I suspect what has happened is this. Now check this out. This is pretty wild. Is that the folks that are buying the treasuries are already in dollars, because if the dollar's getting weaker and the treasuries are still staying up, and we know that the central banks are selling, that fundamental equation would be a net seller of dollars, a net buyer of treasuries. Okay, so it's going to be wild watching this whole thing shake out. That being said, let's go to the commodity market. This commodity market, folks, is telling me, guess what? We're going topside big time, too. Let's go over to the, actually, let's see. Is gas moving out here? Let's see what we got. Dave from Clearwater. Let's see what he's doing out here. 267 natural gas. 16,000 contracts. Oh, this is going to get interesting. I like that. What happened yesterday. Look at that. Let me see what happened in this natural gas market yesterday. Okay, so well, not for a longer term, but for a shorter term, gas wants to go back to 272. And that's a big move. 72. That'd be a big move if that's the case. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials down 24. Nasdaq's down 29. S&Ps are off 5.5. Apple's the culprit, folks, right across all the indices. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials down 35, Nasdaq's off 35, S&Ps are down 6.5. Some of the higher volume stocks on the way down. Well, no, percentage moves. You have, it's interesting, Amazon's down $11. You got Google down 8. You got Tesla down 760. Regeneron's down 640. That's nothing for them. They were up $40 yesterday. Illumina's down 470. Skyworks is down 444. That's of course, an Apple supplier. The Apple suppliers have been getting smoked pretty good. You get Bayou down $4. VMware is off $388. Some of the leaders inside the marketplace right now. Franco-Nevada is up, let's see. That's up 45 cents. You got Boulder Energy. You got a lot of the energy stocks are actually up. Some of the higher volume stocks in this market right now. Let's see what we have. So eBay, we'll go over to eBay for a second. eBay is the leader inside the Index 100 on the way down. That's down 149. You have General Electric off 29. GoPro's down 147. Facebook's down 123. Let's go look right now. Pull this baby up and see what's going on with eBay. Okay, so eBay's trading. Look at this. Okay, this is going to get dicey, folks. So eBay's down 149. We are at 24.14. Your swing low from August 24th is 23.23. And you're going to go into it with volume, man. This is wild. Okay, so the more equities, folks, that, you know, depending on how long you've been listening, if you remember, the first benchmark out here was October of 2014. It was a high volume swing low. We took it apart. That took like, the market was staying at highs for like, what, 5-6 months like that, right? Just never moved, but that was the first benchmark. That's where it went. This benchmark now that we're talking about, the August 24th, this is of course an important benchmark. Why? Because that's where the market just about crashed. The more equities that come after this and basically take it out, and it looks like eBay won't take it out today, but will take it out. The reason I'm saying we'll take it out, we've done 11.8 million shares already. It's already taken out the smaller swing point from the 29th. That smaller swing point had volume of, let's see, 19 million. Price points 23.76, and we've hit 23.77. So this is going to more than likely be an ABC down. 27.60 is your A. 23 is your 76 your B, so you get $4, which will get you to 21.93. So 21.93, of course, will blow away the August 24th level. That's a big number. You know, you start, we had a couple of those equities come into it yesterday, basically took them apart. The more equities that get into it and take them apart, the more probability is that the actual indices will take them apart. Yesterday, what we had actually it took it apart a few days ago, was Illumina. Illumina, on August 24th was 179. It did a counter trend bounce up to 213, and now it's trading at 142. I mean, that not only took it apart, that just destroyed it. Let's go over intraday and take a look at Apple and see what kind of juice Apple has. So Apple intraday thus far, it's been going sideways, and Apple was showing its suit the last few days, particularly the day that we were up 300 points and Apple couldn't move. Apple moved $5 off the low that day. That's what it did. Now what you have is that you're running into the 107.31. That's the swing low we're dealing with. That's from October 1st. That is 63 million shares. Now, the way Apple is trading, that Apple is going to do 63 million shares in a heartbeat. That's not even going to be close. I'll show you something about the amount of sellers in Apple right now. This is not you and me selling this Apple stock, folks. Here, watch this. What I'm gonna put up here. Okay, there's a key that what you're looking at. If you're in your car, I'll explain what we're looking at in Tiger TV. What you're looking at is that you're looking at the amount of trades that are done on Apple that are block trades, and they're monsters. I mean, you're talking about we can disqualify the opening trade at 369,000. But you see these other ones, 25,000, 25,000, 24.8, 24, 20. Those are just, think about, what is that? That's 25,000 times 108. These are funds getting out of Apple, folks, and they want out right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back. Dow's down 34. Nasdaq's off 33. S&P's off 6.5. We're going to break back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 25. You get the Nasdaq off 34. S&Ps are off 6.5. Gold is down 480. You get silver off 45 cents. We go over to that 30-year bond for a second. We take a look at the 30-year bond. These bonds are building cause, folks, and it's just right now, so the 30-year right now is down 103,000 contracts. That's not a huge amount, but normally it does about 250. Bottom line is that this also is building cause to get up into the 160, 117 area, and I suspect it's going to basically more than likely take that baby out. Why? Because your 10-year is in a complex ABC structure on the way up. It's a big number, too. If you haven't test drove the Tiger's Den, folks, it's a great trading room we have. Come over to our website at TFNN. You can test drive it 30 days absolutely free. And one of the Tigers in there, and you got to love energy, folks. We're all the same, and I don't think any of us are. Well, we're definitely not sure of how this works. But the bottom line is that energy itself, runs around, and you can't see it, but you can feel it. And inside, I was just looking at a couple equities, thinking, how Wall Street basically has taken folks to the cleaners with the amount of IPOs that were pushed out. And sure enough, right inside the den, the same thing is said. You know what I mean? That, as the Wall Street takes these folks to the cleaners. Now, watch this, though. This is what's really wild. If you take a look at GoPro, GPRO, GoPro, right now is trading at 27.82. GoPro is a classic in the sense that the stock went public at 18, never traded at 18. First day was at 41. Next it goes up to 98. The broker-dealers let the founder sell huge millions of shares into his own foundation. So he bails out at 90, 89, whole ball of wax. Stock is down to $27.82. So when I was looking at that, I'm thinking, okay, so who are the folks that are stuck with it? Now let's go to the Shake Shack, S-H-A-K. There's a lot of these, but these two are glaring out here. Shake Shack, bottom line, it's a burger chain, right? Burger chain that takes in $180 million, $37 million a quarter. Shake Shack, what does Shake Shack end up doing? Shake Shack goes to a price point. Let's pull this back. So Shake Shack goes to a price point, starts out at 38, goes up to 96, you're at 45. Okay, so now let's go back to the aspect of who's owning this and getting trashed. Well, what this is all about, and this is where this really gets wild, and I remember when Steve Rhodes and I used to do the show together, he used to bring this up quite a bit. And what it is, it's the structure inside all the funds. Okay, so picture how Wall Street is set up. You have the broker dealers, you have the banks. The bank's going to sell out, right? So as you're selling out to the public, right, you know the pros aren't going to buy this. The pros get it the first day. If you're in the business, you get it the first day. You sell it out. You make 10, 20, 30, 40, 50% in 2 or 3 days. Okay, that's the sellout. You keep it for a little bit longer. Some of it, you try to, the rest of the industry pumps it up. But the ones that are sitting there with it, okay, bottom line, are all the funds. That's the name of the game. You know, it's a disgusting game, folks, okay? But the bottom line is that when I was just even looking at GoPro, I'm saying to myself, you know, that many individuals are not going to get taken to the cleaners. That's my own concept of it, okay? But that many individuals, unfortunately, do invest in all these funds, and because the funds are part of the whole foundation, the funds do the deal. Why do they do the deal? Because the funds are getting paid fees. That's what it comes down to, you know. And so that is the way that these things can go public, number one, and they can run them up and then destroy the texture, you know. So it's amazing actually watching this whole thing shake out. Let's go take a look at some of the Dow stocks out here. We have IBM up 16 cents, Big Mac. Oh, Big Mac. Let's go to Big Mac. I got to go to Big Mac. The reason we got to look at Big Mac. So Big Mac out here this morning is up $1.66. They now are serving breakfast 24 hours a day. So if you want to basically roll into breakfast 24 hours a day, you can go to Big Mac. Now, we put this up on this is going to be interesting. So look at this. This is the top of the consolidation. So Big Mac right now, this has been in a consolidation since 2012, maybe longer. Let me put this on a 5-year, monthly. Wow. Oh, this is going to be wild watching this shake out. So check this out, folks. I got to put this on a 10-year monthly. Wow. What is Big Mac up to? Okay, so the first high in Big Mac was in January of 2012. You had 120 million shares. Next high, 102 million, which is still good. Next high, 86, which is not enough. Now you pushed into it 123. This is interesting, man. Something's going on with Big Mac here. So check this out. In a bad market, Big Mac is actually pushing into its swing point with volume. And this is a monster, man, because if this takes it out, the A point on Big Mac is 50, the B is 102, and you're talking about a structure that started in 2009. That means we're all going to be eating garbage, folks. Let me see this. 50, 102. So you get 52 bucks. That puts it at 133. Something's happening here. This is a total difference than Yum. But this is actually pushing. This is pushing its swing high in volume, and it's probably an ABC up. Now, what could Big Mac be doing that it's going to get that bizarre? So they're taking in. Last year they took in 27 billion. This year they plan on taking 25 billion in. Next year 24 billion. You know, it has. There is a big overhaul. There's no doubt, but evidently they're going to do something right because there's buyers there. That actually that looks like a monster ABC up, folks. Let me go over to Yum. It's pushing a swing point when you also have a long-term consolidation like that, and you have consistency. It's like, man, that's a decent setup. Where Yum just doesn't have it. You know, Yum just come off the highs with volume. Yum is at 68. The high was 95, and Yum wants to get down to 47 or something. Big difference. It's almost telling me that Big Mac's going to get into a different field, because either that or it's going to be our health bills are going to go through the roof, folks. Okay. One of the Tigers is saying, and they give out 25 billion calories. There's no doubt, man. Hopefully they're going to revamp, and as they're revamping, they get at least some healthier foods in there. You know, we'll see where that shakes out. Let's go take a look at the NDX 100 intraday. What we have thus far is this. If you take a look at the Qs, you had the first sell down. They're trying to build cause to get into the lows that were generated out here yesterday as well as 2 days ago. The actual NQs will give you a better indication of where that is and the drivers of that. Okay, so you can see your first sell down. We got to that 284 mark. There wasn't enough volume on that down at that level. But bottom line is that there wasn't enough when it just did the counter trend bounce. So it's going to try it again. What is glaring out here is the 4268. We've hit 84. I expect 68 will be done. So 68 would get you down. What, that's 70. That the NQs are down 32. That'll get the NQs down about 32, 40, 52. 52 bucks. That is game. We go over to the IBB. Let's go take a look at Regeneron. Regeneron yesterday was up $20. That's how the stock likes to trade. Today you got it back 7. And when she came up, she went up with 1.2 million shares. She's backing down with 192. The longer she stays inside 479, the more higher probability is that she'll go to 463. She's $2 inside it right now. We go take a look at Biogen. You know, Biogen was the first equity off the highs. Oh yeah, look at this, man. And this is pounding on its August 24th low. That 265, you're at 276. Celgene, CELG. Celgene's just got a sideways move out here today. This thing, the way this market is set up right now, you're Thursday, we're coming into Friday, you're just going to see a subtle rollover. That's the way this looks to me. I don't expect any big fireworks out here tomorrow. What we will have, though, actually at 2 o'clock, this is going to be kind of wild at 2 o'clock, because at 2 o'clock we do have the Fed minutes out. So actually, that will put a little juice into this marketplace, you know, because what has happened right now, it's amazing that folks still think that the rates are going to go up this year. I mean, I know Yellen came out and said, no, we're going to put them up this year, after they turned around and said they're not. I don't see it. In fact, it's not even close to me, you know, but we'll see where it does shake out. But it looks to me, when you just look at the 10-year and the 30-year, how it's trading, it's like, you got to be kidding me. I mean, in order to go up, man, the Fed's going to have to do a lot of work. The 2-year right now note is at 0.6 of 1%. The 5-year is at 1.3. When you take a look at that and you see where the rest of the world is, folks, okay, we're so much higher, it's unbelievable. You know, so picture a 5-year. Our Treasury borrows money at 1.3%. In France, it's 0.2 of 1%. In Germany, it's negative. Negative. In Germany, if you want to get, look at this, man, this is sick. If you want to lend money to the German government for 5 years, they're going to charge you 0.1 of 1%. Yeah, you heard that right. In Italy, they charge you 0.6. It makes 0 sense. In Spain, 0.8. This is like so bogus. Our rates are going down, man. This rates are going to go down. I'm telling you, folks, get your heads wrapped around hard assets. Hard assets are going to explode. You know what this is going to be? This is going to be one of these deals 2 or 3 years from now. You're going to be sitting around. We're all going to be sitting around. Because even me feeling 8,000% that hard assets are going to the moon, I'll still be sitting around scratching saying, oh my God, I can't believe that they're up that much. Because these rates are so low that the correlation of owning a hard asset, there's only so many hard assets. That's what it comes down to. There's as much debt as they want to keep lining up, and evidently that's how this is shaking out. They're going to just keep giving money away, and the more money they give away, folks, the more hard assets go up, you know. And percentage-wise, yeah, it can be a little, and, you know, depending on where you are in the cycle of life. If you were in the last inflation phase, I don't expect that, but you never know. If we just get inflation going 5, 6, or 7% right now, let's say 2 or 3 years, that's going to blow people's minds. But it seems that it's getting closer in my own head that that's what's happening, and that is what will happen. You know, so it's going to be wild watching this shake out. 877-927-6648. The volume thus far in the market, we have 194 million on the NYSE. That's short volume. We get 464 million in the NASDAQ, and that's big volume. So the correlation there is pretty cool. You're going sideways, a subtle move, slightly lower, and you do have an expansion of volume as you're doing that. The XLE, we take a look at the XLE out here. XLE's just going sideways. The next pullback in the XLE, folks, you want to be all over it. You know, the XLE came off those lows of 59, ran to 69. If you get a pullback to 63, be all over it, man. That's a nice setup. The XLF, forget. Don't even think about the XLF. XLF, those banks can't get out of their way. The XLF right now, and here it is. The XLF's trying to push higher again today. Didn't have the volume yesterday. It's trying to push higher today, has even lighter volume. Don't forget, folks, we start live programming every trading day right at TFNN, 8 o'clock in the morning, 8 to 6, and we replay all of it. You can get it all right in your cell phone, TFNN.mobi. Stay right there, folks. We'll come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And you know, we no doubt are at the beginning of the presidential race, and they're gonna be throwing bombs out here everywhere. So this latest one, this is a pretty good one too. This has been done, tried to be done before, okay? But Hillary Clinton is proposing a tax on the flash boys that may be unlike any in the world. She wants to penalize traders who use super fast computers to repeatedly submit and then retract their stock orders by charging a fee for the transactions they cancel. The proposal released by the presidential campaign late Wednesday, will gratify critics of high-frequency trading who've long argued that the industry's reliance on orders that are never executed is a hallmark of unfair markets and worse manipulation. The amazing part about this story, folks, is that what I've found over the course of the, let's say, the last 30 years in the markets, right, is that it's amazing that you have folks that say things about markets they have absolutely zero clue of how markets work. Now, a tax on any type of transaction, buying and selling inside the marketplace would destroy the market, like in 2 seconds. What it would end up doing is that it would stop the flow in markets. The aspect of putting bids in and canceling the bids and finding out where everything is, that aspect there, that's close. That's a different issue, because that's close to market manipulation. There's no doubt about it. It's going to be interesting to see the case going through. They have a case right now of spoofing. Now, when you look at the case that they're bringing against this guy for spoofing, and he made a good amount of money, versus what the high-frequency traders do on a continual basis, I don't see a difference. So I can't wait to see how, in the trial, how they make this difference. Because what a spoof is that you're putting bids in, and you say you're going to buy them, and then you take them away and you don't buy them. What the high-frequency traders do, they do the exact same thing. And one of the keys inside the case thus far, the allegation is that the guy was caught saying that, no, that's what he was doing, versus the high-frequency traders saying, no, we are not doing that. So that allegation and how that's going to be playing it out is going to be really wild watching. But needless to say, you are going to have these things. They're going to throw everything at this thing. And what will end up happening, I suspect, by the time that the presidential election comes along, the markets themselves are going to be volatile enough that you're going to see this from all sides. I mean all sides, okay? Because there's enough out there that they have to turn around and blame the markets versus talk about something that would be solid to basically have us go forward. So, and then you get the interest to carry tax. So the carry tax gets interesting because this is how that carry tax works too. They talk a lot about hedge funds, and they lump all hedge funds into it. That's not the case, folks, because what it is this. So picture this: when a trader or a fund trades in and out quickly, bottom line is that you're paying taxes on that before it even gets to the bottom line. Okay, where the actual carried interest can make huge amounts of money, and this is where this does happen, is that inside a prospectus, if the prospectus says that they can use the carried interest to keep it in the fund and not take it out, then you're talking a different ballgame. You stay right there, folks. Man, Mr. Basil Chapman's going to be coming up next. Growling Problem with you, Darryl Martin, Steve Rhodes, Dave White. We'll be back here this afternoon. Have a great one. Have a safe one. Appreciate you being here. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.